Morning, Nighthawk. Sorry, I'm still getting set up here. There we go. All right. Well, see what kind of garbage the market has for us today. So NASDAQ looks like it's 2.2% lower so far. One thing I didn't notice the past couple of days is the failure at the 50-day. I saw that yesterday, and I'm like, oh, that's lovely. Morning, Brandon Vanek. Better than the fake stocks channel? Well, I don't know. They're pretty good over there. All right, so IBD's got the market uptrend under pressure today. And let's see what the stock futures rise, blah, blah, blah. And they have, yesterday, Friday, while technically not a distribution day, let me show you their chart. Similar to my chart, but a little different. Friday, technically not a distribution day because the volume was lower than the previous day. So technically not a distribution day. Was a big outside day. There's, minor possibility. It just feels really bad right now. I'm pretty sure a lot of people feeling the same thing, but it feels pretty bad right now. We had a couple of stocks, in fact, quite a few stocks setting up, and then a lot of stocks kind of failed that and rolled right over with the rest of the market, which is normal. A lot of the stocks will trade with the market. A few were trading against the market. Obviously, Tesla was against the market, was up. At least wasn't. I guess Tesla was not up. I thought Tesla was up. I guess it was down, but not nearly as much as a lot of other stocks. It's only down about 1%, 1.25%, something like that. So, how long till the correction becomes a bear market? We're pretty close. I mean, it has, from a technical perspective, it looks pretty bad at this stage, I think. With the sequence of lower highs here, looks like a downtrend is firmly in place from an index perspective. You have the 50 crossing the 200-day, indicating that there's more potential downside. Let's see the last time the 50 crossed over the 200-day. I think it was back in 2015. That's not even what I wanted to do. Still waking up, guys. There we go. All right, so there's the 50 crossing the 200. Last time we had the 50 cross the 200 was here at 2015. And while it didn't cause us to go down a tremendous amount, we definitely chopped around for about a year before moving higher. And then before that, we had another crossover here after the market was already kind of choppy. Both situations, we actually didn't go lower. And I was reading an article last night, I think it was on IBD, and it was talking about the 50 crossing the 200-day. And someone said that actually causes short-term bounces more than it does just a tremendous fall-off in stocks. You could see here, so here's the previous time, right about there, 50 crossed the 200. We did go a little bit lower, and then we basically bounced higher. Before that, there's your 200 right there crossing. And we basically, if you look at that day, we were down here, didn't go much lower. I mean, not to say that's going to happen this time. Here's another situation. You have the death cross and then nothing, really. Nothing major, at least. It does go lower, but then comes right back and chops around. Again, nothing say we can't buck the trend and go lower. In fact, that's really what it feels like right now. 50 crossing the 200 happened here, which was down here. We went sideways a little lower and then bounced back up into the moving averages. and then obviously 2008. So we fell apart after that. I don't know if we're going to have that kind of reaction this time around. I mean, this isn't like 2008. We don't have any major impetus to sell off that deep. Nice to finally catch someone in the live stream. They let half our staff go a month ago. Working around the clock. Technology artist from New York. What's up? Oh, okay. Everything moon and you can retire. Um, yeah, I don't know. It's interesting. I will say that it's a little interesting. We have, we talked about lower volumes and then a higher volume. We had the higher volume was on Thursday, which was our big turnaround day. That closed way towards the high of the day and had greatly elevated volume. And then Friday we had the other turnaround day, and then we had lower volume, although it was a little bit higher than the downtrend that was put in with the down days. Um, so again, we're mixed signals. We're very news heavy market right now, which is not a healthy place to be in. With news driven markets, you really have no major clue where the market's going to go because the news is all over the place. I agree, it all does seem doomed. It all does seem doomed. We'll just kind of have to. What's up, Miguel? I know who you are. Thank you for joining. But yeah, so we just, we saw a little bit ago, we saw let me do this real quick. Let me get rid of the 10-day moving average for right now. So it's pretty clear with the 50 and the 200-day. So actually that peak day, looks like that was our death cross day in the stock market. We came down, pretty much ran down, except for that one great day. And again, going back to so over here, they weren't even in danger of crossing 50, well above the 200-day. And then this is when it really started to take it on the chin. Look at how quick that bounce was. 50-day moving average barely even budged. So again, we're looking at 2015 is the last time this happened. And if you look at the macroeconomics, there's definitely a little bit to be scared about. But it has to come to pass, I think, or at least has to keep signaling that it's going to come to pass. Inverted yield curve, trade war, those are the big things at this stage of the game. And so it's really difficult to fortune tell here. Short the FTSE if we break support, thinking about Brexit mess. Actually, don't follow the FTSE. We can take a look, though. There we go. And I was looking at Trump bobble like Bitcoin. You mean like? No, I just woke up, Miguel. For the stocks power hour, basically get up and get a glass of water and then come to the desk. FTSE. That's where I was going to go. Not sure if I have the FTSE up here. Great British Pound Futures. There we go. Oh wow, that's pretty bad. I mean, yeah, I don't like that at all. That's a pretty big break. Yeah, definitely below support. You had a nice bear flag right here. I mean, the U.S. markets don't look a heck of a lot better. I think a lot of cash right now is a great place to be in overall. Um, yeah, that looks pretty bad. That's already broken support. We haven't quite done that yet. There's a good possibility we can. Um, on the scary side of things, there's a potential for head and shoulders here. I'm sure a lot of people have spotted it. I don't think it's. Well, I shouldn't say this. I probably have to look at it a little bit more. And that's also the footsie kind of looks like that too. Very similar pattern: shoulder, head, shoulder. It's not very pronounced, but it still could happen. You see, here's the 200-day moving average already flattening out and rolling over. Hey, my V8 tool on the stock market. What's it got to say? Well, from here it says F you. That's pretty much what it looks like. Yeah, they're reversal patterns, and so I think that's why you see them all over the place. But what you have here is a bear flag, which would also be your shoulder, and then a gap down, um, and then maintaining that so far. A pullback into the shoulder would be a definite. A pullback into the shoulder on lighter volume is more than likely a really good shorting opportunity. Maybe even a break of this may be a good shorting opportunity. Um, but right now you're kind of in the middle of those ranges, so I just watch it for the time being. Some talk about shorting the stock market. That could be in the cards as well. Um, maybe we'll see how we handle this line right here. And BTC, if no bounce bear flag too. Haven't looked at BTC this morning. Oh, right here? Yeah. Yeah, definitely. We're getting that lower volume area. That's 15-minute. Remember the other day we were talking about needing lower volumes around here? Now we have lower volumes. A couple days away it looks like, but we got the lower volumes that we would probably need. Oh, there's a good selling candle on the 2-hour. Yesterday's it was rallying, it sold off. I wasn't looking at the markets yesterday, but we're talking about a selling candle. Remember yesterday in the crypto power hour when we went to sell, we were right in the middle of that. Apparently, we rolled over. It looks like right after the power hour closed and closed towards the low with a high volume sell candle, declining volume ever since. Interesting. Yeah. There we go. So yeah, markets look damaged here. Absolutely look like they're in danger. I think right now it looks like cash is really the best place to be um, in stocks, but you're still getting mixed signals. It's still not that bad. It's still not like really bad. We could get another big flush out here and have another high volume candle. It may put us in a bottom that reverses us again. So it's not for short term trading. You basically kind of buy those high volume scary bottoms and you sell those tops because they end up reversing quite frequently. So if you think about it, here everybody thought the world was over because we undercut this level. We ended up bouncing here, and then we ran right up into a follow through day, and the next day was the reversal day. It didn't seem like it at the time. It was just a nice normal down day, lower volume, nothing crazy, which started another downtrend that ended up in a high volume bottom, which started in another uptrend, which another non-crazy. So anyway, if you get another high volume bottom, it's probably gonna bounce you out if you like enter shorts. Any opportunity where people enter shorts, they rip the market. And so again, this is an index. This is not an individual name. Miguel, I meant the FTSE. Cash or short on the FTSE. Yeah, you could probably do a smaller short. I would probably go with a smaller short on the FTSE than I would necessarily all out short it with everything. I mean, you can do. Oh, actually, I don't know if you're native in the FTSE or not, but let's do some similar stuff here real quick. So there we go. For stocks, for some reason my mind just says, "Hey, why don't you do bars?" Um, oh yeah, there's a high volume sell day, then a high volume sell day, a low volume, very low volume bounce off the lows, lower volume up day. Yeah. This seems much more well telegraphed than the U.S. market, in my opinion. Definitely, this bear flag took, how long this takes? It took a while. 3, 4 weeks, 5 weeks, 49 days. So, yeah, this one took a while to transpire, then a big swift downward movement like that. Like I said, a bounce into this trend line would probably be a good short. If it undercuts this trend line here, you probably could get into a short. But I would try to rather short on a bounce than I would try to short as it undercuts, just to mitigate some. I'd rather short like on this day as it closes towards the lows and fails to go higher than I would on this day where it undercuts briefly. So this one undercut briefly and then bounces back 3, 4 days in a row. You want to look at those closes and how they're really looking to you, because over here you undercut these lows. The stock market's interesting like that. It tends to show you what it wants to do when it closes. So here it kind of closed at that support level or above the support level, and then it rallied. And then when it finally undercut that support level, here's when it really dropped. But up here, failure to go higher. We came lower, bounced off, tried to go higher and failed. Any one of these probably could have been decent shorting candles with a stop up here. You just would have had to wait a while. And then this one here, again, another opportunity. And so you could short it right there. And this time it broke. So I'd probably much rather buy the bounce up here, because the stock market takes a while for things to transpire sometimes. And so if you short it here and it bounces back up into the trend line, maybe that 2.83%, I don't know how that's going to do to your account. If you're in futures, that's going to be exaggerated, so you're going to have much larger losses. May not be sustainable. So I'd rather try to short it if it bounces up than if it breaks lower, because you could end up in these situations. If it breaks, you could take an entry position, a smaller position, and then see what it does towards the close. And if it rallies back through, then if it rallies back through, maybe you close your short. Maybe you close your short, or consider closing your short in a similar situation to here, because it rallies up. Market likes to do that. You guys think crypto's manipulated? It's not really manipulated. Stocks are manipulated. Yeah, 69. If you want to put a level on it, yeah, I would do about 69. I would also be looking at some of the top stocks within this index. I don't know what those would be, and look at those. Do those look healthy? Are they broken? Kind of like what we're doing now with Apple, Amazon, Microsoft. The top stocks in the U.S. market. Those kind of give you a little bit of a sense of where we could go. That's the general idea. Not that it won't. There's nothing that black and white in the market, but it's less likely to. So looks like 69.16, 69.15 is about that range. So I would keep an eye on that. All right, let's get back to U.S. stocks. See what we're doing. Down 0.2. Only got about 2 minutes left. Let's look at some pre-market movers. I got the list up. Let's see what could be good, what could be bad. We got very up, but they're down a tremendous amount. Nutrisystem up 30%. My goodness. 44.51. Wow. Gapping up into all-time highs. Are they getting bought? Ooh, yep. Trividi Health to buy Nutrisystem for 30% premium. They got bought. Wow, okay. All right, fair enough. What causes a 30% move in what looks like a bear market? A buyout. This is up a bunch, 20% right there. Uh, 3.54, so nothing doing there. MITK. Oh, that's interesting. 10.5. So that's already up right towards all-time highs. MyTech. I don't know much about MyTech, but that could be interesting. Way above recent highs. There's recent highs. It's up here. 10.5. I can't even see it on my daily chart. Another buyout. Another buyout. MRNS, nothing there. RARX. Oh, wow, that's an interesting chart. RARX. Look at that. Look at the weekly. Nice. Looks like a cup with handle right there. And we're definitely gapping above that level. 15% to $19 essentially. Which should be right about there, give or take. This could be a double bottom. Actually, yeah, it probably would be a double bottom. I'm not sure if you consider that a... See what the weekly says. Interesting chart. RARX. I've never heard of this name. Let's look it up. RARX. I like it. RARX. Relative strength 99. So pharmaceuticals, the market just opened. Down 0.25%. We'll see what happens. So this is develops novel therapeutics to treat life-threatening diseases. Okay, so biopharmaceutical, it looks like. 25 EPS growth. No sales, according to IBD. 16% funds change in funds owning stock. 3/4 of increasing fund ownership. Market cap of $533 million. Very low average volume. You were just up and now you're down. Okay, never mind. Never mind. What's moving here? Tesla's up. Ahmed's up. Goose is up. Torch, Plug, Solo, some garbage names at the top here. Facebook's up. That's a little less garbage, but not really moving a whole heck of a lot lately. Kron, I just saw. PayPal. What's down? EDU, Emmys, Apple. Oh, that's good. Oh, wow. Apple gap lower. Interesting. Let's see if that gets bought up or not. That's our best case scenario. As that get buys out on a Monday shakeout. DDDI Robot, WHD Fang. Alibaba's down. So a few more quality names at the bottom than at the top. We'll see if those quality names rise. Hold on a second, guys. We'll be right back. Okay, I'm back. So we got up 0.25% on the open. Let's see what happens. Apple gap lower, rising a little bit. Not really tremendously rallying, though. Ideally, you'd like to see it really just shoot up. See what Amazon's up to. See, Apple looks the worst of it right now. Amazon doesn't look as bad, but still chopping around moving averages, which isn't the end of the world. I'm not mad at Amazon for that. I mean, Amazon at least has a nice bottoming day. We talked, I think, a week or two ago. Maybe it was last week. Maybe it was just last week about Apple probably has, could have more downside than Amazon just based on their business, where they are in their business cycles, and kind of how each company is ran. Um, Apple's still in a predominant downtrend here. Amazon has already put in some what look like bottoming areas. I think it's Ryman. Yeah. So it's interesting though, Christina, because you're talking about an index. Um, you're not talking about an individual name. So in my opinion, it's highly unlikely that that we drop like 50%. I don't think there's any chance of that. So when you're dealing with stocks, you've got a lot of macroeconomic indicators that you have to take into account. Like, what is the impetus for us going lower? In 2008, I mean, you could just feel it walking around that, really bad stuff was happening. You didn't even necessarily have to be involved in the financial markets, you know. So this is a different scenario. We have a good economy. We're not losing jobs at 250,000 jobs a month like we were back in 2008. So I don't think we're going to be dropping a tremendous amount. Doesn't mean we necessarily go higher immediately, but I don't think we really just kind of crash through floors. Everyone tends to think in black and white scenarios. In 2008 is the black scenario, and 2017 was the white scenario. So you've got two dualities, and you don't want to oscillate too much down here. I say you either probably hold your longer term positions, or you if you have cash, you hold the cash until maybe you see something better that you like, but you may be paying up for some price action. And by the time we make a higher high, which a lot of people may wait for that, you're already up another 9% up here on the markets. The market's only down like 15%. Actually, probably 14 at this point. So 16% upward move. If you wait till here, you've got about 8%. And if the economy isn't, or if the powers that be within the market don't like what the Fed's doing, or they don't like that inverted yield curve or something, then we could end up selling back over again. So I wouldn't be in and out too much here. I would either try to wait for a clear signal if you want like a second follow through day. Let the market try to tell you what to do instead of just saying, "Oh, this feels bad," and then exiting positions, because sometimes it works. Don't get me wrong, sometimes those feelings work, but sometimes they don't. So I prefer to listen to the markets than listen to my feelings, because like I said, cryptos aren't really manipulated, but stocks definitely are. And it's part of the game. They do it with real money, so it's not like they're fudging numbers on an exchange. They're playing the game the same way you and I are. They just, we're in like a Olympic-sized swimming pool. They are a blue whale, and we are plankton. So we're definitely affected by the ripples. But as long as you realize, hey, the blue whale's still afloat and alive, you'll probably be okay. So, all right, up almost 0.5% right there. Just touched 0.5%. That's pretty good. If we just don't fall through the floor, we'll be okay, I think. So here's the thing. The stock market can tend to bore you to death at times. We have these really volatile times. I was hoping we were going to be done with volatility kind of after our follow 3-day here. We had 3 days of kind of some more normal action. Unfortunately, we did not. We had three pretty busy days. We had the big down day, big down day, the big up day, and the big down day all simultaneously, really whipsawing investors back and forth. If you do notice, though, the highest volume day out of those was the up day. That is a positive sign. Can't say it's the end-all to end-all, but we do have some positive signs here. High volume bottom here. Here the high volume was this day, but we reversed after a trip lower. And then we talked about high volume bottom day there. So they're buying these bottoms in elevated volumes, which is encouraging at this stage of the game. And again, this is an index, so you're thinking bigger picture. You're not. This isn't Apple. Like, this index could go up without Apple. It's possible. You know what I mean? It would definitely give it a headwind. So we're probably not going to jump into all-time highs without major participation from names such as Apple. But if you have other sectors having really good runs, and as long as Amazon and Microsoft remain healthy, we could move up without Apple. You're looking at an average here versus an individual name, and so I think that's the encouraging part here. So Amazon doing pretty good, 1.3%. Kind of looks like what could be a mini declining pennant here. Ideally, that would give us another move up at Amazon, which would give us another. Keep in mind now, again, guys, we're 8 minutes in the market open, so don't take anything I say right now with tremendous validity because a lot of trading left to do today. But if we don't go any lower than these candles right here, and this is our ultimate low, and we put in a higher low, that's one thing we haven't had yet, is a higher low in this situation. So if that occurs, that would be great. I think that if like bounced up here and then overtook these highs, that would really definitely put in a higher low, and I think that would be cool. But that's asking a lot, I think, at this stage of the game. So just keep that in mind, though. Keep that in mind. I mean, so if we start to reverse, if we really start to undercut, take a look at volumes and see if they're elevating, going lower. That's a really bad sign. That means we're more than likely to drop through this floor, in which case we'll go back into a market correction. In the case that happens, let's see what I can do here with this. So we talked a little bit about 20% lower initially when we were first doing this. Puts us right about there. Right about there. So that puts us at 20%. This would be considered a bear market. We have not had a bear market in the stock market since 2008. That was our last bear market. Everything else has just been either a retracement or a correction, depending on what type of terminology you want to use. But if we get down here, if we start undercutting lows again, in my opinion, that would basically cement a bear market if that occurs. If we undercut this low, see at this stage of the game we weren't even quite down. We were down almost 15%, so that was a hit. Here we definitely overshot that at about 16.5%. If we get down another layer lower, I think that'll put us in bear market territory and probably will keep us lower for quite a while. If we do stop here and meander about here, maybe move higher and lower, oscillate around, like we saw in 2015. It took about a year for that 2015 market to kind of play itself out right there between this high and the ultimate time when we broke it and kind of put in, there's kind of a layer of support right there. There you go. So right there is when we finally broke it and this started acting as support. So this was July and this was late July. So a little over a year. We could definitely do something like this. This seems more manageable at this stage of the game to me than it does going much deeper. Doesn't mean it can't happen. Definitely doesn't mean it can't happen. But if, again, you look at the max, so this was an 18% correction. We went 16.5. We went, a good amount of that. So, I mean, hopefully we're done, but, I mean, you never know. You just never know. So, let the market tell you what to do and go from there, because you don't know. I don't know. I have no idea. Things look okay to me, but I'm not like, we're good. You know what I mean? I would like to say that, but we're not really that. But like I showed a minute ago, I think we have a lot of signals in the market of some buying by large institutions, and definitely there's some selling as well. But we have a lot. The high volume candles have been much more supportive at this stage of the game. They've been the bottoming candles and the rising closing candles. So I'm not completely giving up on the stock market quite yet. Not like Bitcoin. I mean, Bitcoin's a completely different ball game. And we've been discussing this for, over a year now in terms of Bitcoin. So, anywho, there we go, 0.6%. Looks like we're rallying a little bit. I would love to maintain around here. There's going to be some good opportunities for some buys. From a trading perspective, from long-term holds, if you want to buy indexes or if you want to buy, I don't even think buying Amazon down here is necessarily horrendous, to be honest with you. I mean, it's down a tremendous amount. If you're thinking about longer, just 19% discount at Amazon, that's pretty good. It's a 25% rise, essentially. At least it should be. That says 20%. Yeah, about 24%. So round numbers there. We'll see how it goes. Up 0.7%. Hopefully they scared people enough on Friday. They don't feel like scaring us on Monday. Good. A scary Monday is a scary day. I will say that. Like if this reverses today, it's going to scare the pants off of me. These big reversal days are more abnormal than normal. Like this day right here, where we end up dropping, like what was it, 3% lower? Yeah, we end up dropping 3% and then coming all the way back up 3%. If we go up 3% and come all the way back down 3% today, muy no bueno under that circumstance. Muy no bueno under that circumstance. Let's see a couple ones we've been looking at recently. Twitter pops to mind. So Twitter had has a cup with handle down here. Here's your handle. Pretty choppy out of the handle. We had Friday, which was a higher volume sell day. Here's one of those round trips. All the way up, all the way down in Twitter. That's a scary day in Twitter. Try to break out here from this declining trend line, which is the low buy in the handle, and then reversing. So far, maintaining the closes above the trend line, which is pretty good. Above the, below, that's a 200-day? This is where it's not advantageous to have them all the same color. It looks like that's probably the 200-day. So below the 200-day, but definitely bouncing above the 50-day. 50-day maintaining support. So that's a little more bullish in Twitter. Twitter has kind of been in its own market as of recently. I'm liking Twitter a lot more than I was over here. Also looks like I'm hitting inverted head and shoulders, and you've got a target up here of about $46 if that were to take place. What else have we been looking at? Do we look at ANET? No, not ANET. Stitch Fix looks like it's at the top of our board today, which doesn't look like much. SNCR, garbage name. Torch, garbage name. You know what? I'm actually just removing Torch. I'm not sure why this is still up here. That's a really old name, back when I was trading some weird stuff. Ankle just did something weird. All right, NEWR on the weekly chart, putting in a little trend right there. What's up, Eli? Good morning, buddy. Newer 5N. Cloud9. It's not called Cloud9, but it's a show called Cloud9. No, it's called the store's called Cloud9. The show's called Superstore. Go back to sleep. It's too early. Go back to sleep, Vanek. Sleep's good, buddy. Sleep's good. FIVN, not looking too bad here. It'd be great if we could break this trend line on some volume. You can see it's been doing really good, actually, if you look at it. It has had some price movements back and forth. Volume's been a little more muted, so not bad. Cloud9 could be good. Facebook with 3.4%, a little bit of a change for Facebook. Looks like it is attempting to get over this longer term trend line it's been in. I'm not necessarily, could be a good buy. Could be a good buy. You never know. They didn't react horrible on earnings, so there's still an appetite for the stock, and they did drift a little bit lower, and then they drifted right back higher. So I don't know about just a trade right now. There's still a lot of fear in the market, but maybe, yes, it's too small of a little candle right there. But anyway, if you're interested in trading Facebook, maybe you want to look at it for some price action. Maybe see if there's reversal patterns in the shorter term. But it's doing okay. Facebook's doing okay. You're on a go, Eli? All right, buddy. Well, thanks for saying hi. Let the body hit the floor. Yeah, I definitely still think we're chopping around. We got SendGrid. SendGrid not looking bad either. Hold on a second. I think the kid's leaving. Hold on. All right, I'm back. Eli says don't trade. Yeah, I'm half tempted to agree with Eli. I just here's the thing: you've got to keep an eye on the market and on the stocks. Um, you just kind of have to, So even if it doesn't turn around, you're at least informed on what's going on and what's moving and what's looking good. That's kind of how you have to play it. Looks like we're reversing now. Now we're back down to. I want to move down, move lower here. All right, so we already reversed there on some higher volume on the 5-minute chart. Definitely already getting some reversals. Darn it. Yep, there we go. All we get is 15 minutes of rise before we start selling off a little bit. Not super encouraging, and also rising in declining volume as well. So we have to see what we do here at 6,600 on the futures. Looks like there's kind of a rising trend line right there. So we could actually fail that before we hit that 66. Yeah, from a today perspective, it'd be nice to hold this trend line throughout the day. I think that would be the healthiest thing to do. This is a 5-minute chart. Some of these are after hours in the future. So, all right, you're gonna give a reversal again. That'd be good. One good thing to do is to see how stocks react as this starts to drop. Sometimes if you have leading stocks maintaining while this is dropping, they're selling some of the other names and they're accumulating some of the better names. Because again, it's an index, right? So it can sell off certain names while it buys other names, but yep, straight back lower. Down to negative territory already. That was quick. That was way too quick for comfort. Looks like it's not going to be one of those support days after all. Going to be a scary Monday. I rarely do this, but I'm actually going to move to a 1-minute chart. Yep, look at that elevated volume on the way down. Right there, right there. You have the declining trend line right there in volume. Now you have elevated volume on the down. I remember I mentioned 66. Let's see. And it'll probably go below 66 no matter what. Even if it reverses again, it'll probably still go below 66. Yeah, there we go. It's like a little battle, and there's the break of resistance right there. You see that? Just dropped. Oh, that's some buying right there as they broke through that resistance. Look at that. That could be a high volume candle. Oh, it's climbing, dude. Wow. Only 30 seconds through this minute bar. Look where that volume is. They're eating it right there. Someone's eating something. Wow. Yeah, see, there's appetite down here for stocks. They're just scaring the crap out of people first. You see that? It dropped right there and stopped, and they ate it. Oh, wow, there's some action down here. This is crazy. That looks like a really bad candle. Yeah, it closed bad, but they ate it right there. They ate all that order book right there. Then they let it drop, and then it did this, and then now they're buying it back again. But look, that's good volume right there, though. So look at that. That looks like a scary candle, but and don't get me wrong, it looks like a scary candle. But we were watching it, and it was just sitting there, and it was the orders were coming in, and it was just eating them like this. I'll take it. 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 So I mean, it doesn't mean that we can't go lower. It's something interesting to note. But uh, high volume bottoming candle right there. I'm just looking for some kind of a clear signal of support somewhere. I just want some freaking support. That actually is support, but I realize I'm on a 1 minute chart. I do realize that. But that's an interesting candle because that was higher than the open candle and the subsequent following candles. So that's a pretty and it's the highest volume of the day. So there's a possibility that could be the low for the day. Well, that could be the low for the day. If you guys remember, at least in crypto, I did a study on high volume bottoming candles, and I found that quite a few of them were before the actual bottom. Quite a few of them had high volume before the actual bottom. Maybe that's the scenario. They just let it go lower, eat up some more, and then bounce it higher. So I don't know if that volume gets taken out to the downside, we're screwed. I think we're screwed if that volume is taken out to the downside. So they realized 66 was important. You saw the sell orders come in. We saw it sit down here, and they just ate it, ate every bit of it, and then they let it drop again. Then they started eating again. So I don't know. We'll see what happens. Not to say that, and that's a good signal for a bottom right there. That's a good signal, but it's one. Sometimes that's all it takes, but we'll see how crappy this market actually is. What's our leading stocks doing here? What's at the bottom here? Bit of Ulta down, which is not good. EDU, Anfi, Emmys. Not first tier names down here. Yeah, Mel chart action. Apparently Mel left, so I don't want to, which is weird. Like, how weird is that? Just to just leave. He was doing fine from what it looked like. He was doing okay, and then he just leaves. It's kind of strange. Hope he's okay. And at the top here we got Facebook, which is a huge name, so that's good. Stitch Fix, which has been kind of, well, it was a winner until it had a huge gap down. Our buddy Solo, which is a horrible name. Grubs was a good name. Etsy, YY. So that's crazy. We may have just watched the bottom of the day. That would be pretty interesting. I just want some, like I said, I just want some clear signs of support. That's it. Just give me some support. We've seen some on the daily, like we talked about these elevated volumes right there, right there, right there, right there. So he bought the support because he was expecting a short squeeze based on short long chart. I told him to go with price action the night before that. He didn't lose that much. Well, that's good. So rising on declining volume right now. Not my favorite situation. YYSQ. SQ looking like a falling wedge at this point. This would like if and when we ever turn around, because it feels like we'll never turn around right now. This would be, I think SQ probably could be a really good one. See the huge move it had on the weekly chart there. Let's see if it's undercut. 2, 3, 4. I don't know. This 1, 2, 3. So the last base this had was down here. SQ would have to undercut under 43 to actually reset the base count, which would imply much lower action, as you can tell. That would put us 30% lower in SQ, which would really damage charts. Really damage charts. You think they're broken now? I mean, that would kill a lot of things. Let's see what our MJ stocks are doing. We got MJ, which is the ETF. Nice proxy for some MJ stocks. Not doing so good today. Even on Friday, the volume wasn't great. It looks like it reversed quite a bit. We had Cron, which was up significantly on an Altria investment. It looks like they're kind of maintaining elevated levels so far. We'll see what happens there. We looked at Twitter earlier. It was doing okay. It's still doing okay. Maintaining some green, which is good. What else? Let's look at the big ones. We talked about Apple earlier. It gapped down. It was retracing some of that gap. Looks like right now it's just maintaining the open, which isn't super healthy. That Apple pattern is not, that price action there does not look very healthy at all. Amazon, probably higher market cap than Apple at this stage of the game. Doing okay in terms of price action on the day. It's not doing so great. Microsoft, which is actually doing better than most, actually positive today. A little bit positive, selling off on Friday with the rest of the market. Also in lower volume than the prior day. Google's kind of taking it on the chin. A little bit of a head and shoulders type of a pattern here. It needs another rally to put in a shoulder. We could get that rally for another shoulder. Or hopefully we just kind of go back into a meandering uptrend. We'll see right there, but oops. Google, very choppy these days. Of course, the whole market's very choppy these days. Look at that nice move to the upside on like good green volume right there. Not too bad at all. Right there, right there, right there. And then you have a topping candle, which caused this little downtrend. Right in line with the rest of the market. The market did the same thing right here. Same candle. So, PayPal, Etsy. Let's see what DocuSig's up to. Maintaining those lows. Workday's been a leading stock. It's still maintaining elevated levels, which is nice. That's good. What do we got on the weekly here? Too wide for a 3 weeks tight. VMW, which was looking pretty good. Darn it, you screwed up my chart, VMW. Looks like an H pattern on the 1 minute chart. We'll see how that works out. VMW looked like it wanted to break out. Looks like it's still kind of hanging out around the area. Could do something. Netflix also another leading name of the previous market cycle. Looks like lower highs firmly in place on that one. Lower lows too. We'll see where that goes. Living towards the bottom of this channel that we drew here a while back. Not quite sure how that's going to play out, but could be a decent place to buy Netflix. We've been talking about this now for a week or two. Kind of have a natural stop. They're down about 7%, but going up here you've got, 40% via 7%. if the market turns around here, I mean, these are great prices to buy assets down here. You know, again, I think a lot does depend, again, like I said, macroeconomic. You got China trade war. You've got the inverted yield curve. If the Fed stops raising rates, that will be a big plus in the win column. But I think the Fed is in a deleveraging phase, so I think there's definitely a possibility that, yeah, I'm gonna have to give that some thought. Because so here's the thing: there's actually an argument that the whole stock market rally, and I think it's actually a pretty valid argument, has been supported by the Federal Reserve. You know, I'll use Netflix as an example. If you look at the Federal Reserve balance sheet and you look at the stock market, and there we go, popping right there on the markets. Look at that bottom candle action. Bam. Fed versus stock market. See if I can find a chart. I want a chart. Here's a chart, but it doesn't have. Let me just go to images. No. Where's the one I'm looking at? Yeah, here you go. That's 2016. Huh. U.S. stocks, G3 Central Bank, Fed balance sheet. See, these go back to 2015. How about current? Can I get current? And then I'm going to go, guys. I'm going to check out this. Then I'm going to go see if I can find this. Just doing some Googling on the other screen here. Don't mind me. But I think, you know, come on. I think this is probably one of the major problems for the markets. Maybe this is enough right here. So going back to 2014, you've got the Fed balance sheet here. Now keep in mind we did run all the way through here, but the QE unwinding, the Fed unwinding their balance sheet here. Now this may look extreme, but keep in mind this is from 444 to 428. So it's not a tremendous. It's like a 5% drop in the Fed's balance sheet. And I don't know if they're ever going to have a zero balance sheet, but it's not. We don't need to have a second balance sheet. That's not what I'm looking at. I'm trying to look for a chart, but I think with the Fed unwinding, that could definitely put a headwind for stocks, maybe for a while. I'm not saying we crater. I'm saying a headwind, like we could go higher. See, how come I can't get what I want? Fed balance sheet versus stock market. I think one of these is from. Oh, it's Fred, F-R-E-D. So a Fed balance sheet versus S&P. There's one from 2012 to 2016. You can kind of see right there. We paused a little bit and then we rallied when the Fed started printing again. Not sure if that's a coincidence or not. If that is not a coincidence and we are in fact that's not a bad one. And that goes to only to 2013. But yeah, so there's an argument to be had that our rally is basically Fed money. And if that Fed money goes away, which it appears to be, then that could definitely put headwinds in the stock market. So, on that lovely note, I think I'm going to call it a day, guys. Thanks for joining me here today. Actually, here's the Fed balance sheet chart right on the the board of the Federal Reserve right there. Under $1 trillion to $4 trillion in assets, and it's slowly starting to taper here. And that was January 2018, but it's been flat ever since we were over here at 2014, and we did have a big bull market after 2014. So maybe it's a little bit less of a concern than a lot of people leave it out to be, or make it out to be. But another macroeconomic force to think about. But I'm going to get out of here, guys. Stay safe out there. I don't know what the future holds in this market, but I do know that we need to maintain that last low in the markets for us to be healthy going forward. If we get too much further, down into here, then I think it's going to be a bear market, and not much we can do about it. Either way, not much we can do about it. But at this stage, I still think a vast majority of cash is the best position to be in. If you have those TQQQ bags, I still have some of those bags. I'm not really ditching those at this stage of the game. I think that while it is scary, we don't have enough to really push us dramatically lower. And so I think I'm just going to maintain that levels. I will not be deploying new cash, however. And, we'll see if that situation may change if we do get too extreme of a move to the downside on greater elevated volumes. There's quite a bit of red in here, but it's the futures, so they have, if you look at the Qs here, there's a couple of green days like here and here, but the futures, you have that one green day was red, so it makes it look like a lot of red. So, and we're reversing back to flat again, back a little lower. So all right, guys, stay safe out there. I gotta run, get ready for the crypto power hour, put the newsletter together and feed the kids. So I'll see you guys tomorrow. Stay safe out there. Have a good one.